Hold on to your hats, folks, because the Donald is at it again. Just when you thought it was safe to go back into the market, Trump has slapped new tariffs on China, Mexico, and Canada. That's right, our neighbors and our biggest trading partner are in the crosshairs. The stock market is reeling and investors are running for cover. But don't panic just yet. We're here to break down what these tariffs mean for you and your money. So buckle up, because it's going to be a wild ride. This isn't the first time Trump has played the tariff card, and it probably won't be the last. He seems to think that tariffs are some kind of magic bullet that will bring back jobs and punish our trading partners. But the reality is much more complicated. Tariffs are essentially a tax on American consumers and businesses, and they can have a ripple effect throughout the global economy. These new tariffs are already having a significant impact on the stock market, with major indexes down sharply since the announcement. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite are all feeling the heat. And it's not just the big boys that are suffering. Small-cap stocks, which are often seen as a barometer of the overall economy, are also taking a beating. So what's an investor to do? Well, the first thing you need to do is stay calm. Don't make any rash decisions based on fear or emotion. This is a time to be level-headed and think long-term. The second thing you need to do is educate yourself. Understand what tariffs are, how they work, and what their potential impact could be. Once you have a better understanding of the situation, you can start to make informed decisions about your portfolio. Let's get down to brass tacks. Trump has imposed a 25% tariff on most goods from Mexico and Canada, with a 10% tariff on Canadian energy. As for China, he's added an additional 10% tariff on all Chinese goods. These are big numbers, folks, and they're going to have a real impact on the prices of everything from cars to computers to avocados. Now, Trump says he's doing this to address immigration and drug trafficking, but it's not entirely clear how these tariffs will achieve those goals. What is clear is that these tariffs are already causing a lot of uncertainty and volatility in the market. Businesses hate uncertainty, and when businesses are uncertain, they tend to hold back on investment and hiring. This uncertainty is bad news for the economy, and it's bad news for your portfolio. But there may be a glimmer of hope. There's still a chance that Trump could back down from these tariffs, especially if he starts to see the negative impact they're having on the economy. And there's also a chance that China, Mexico, and Canada will agree to make some concessions in order to avoid a full-blown trade war. The tech sector, which has been one of the hottest areas of the market in recent years, is getting slammed by these tariffs. Nvidia, the chipmaker that's been a darling of the tech industry, has seen its stock price plummet to its lowest point since September 2024. Apple, the maker of the iPhone, and Tesla, the electric car company, have also experienced significant sell-offs. Why is tech getting hit so hard? Well, for one thing, many tech companies rely on global supply chains, and tariffs can disrupt those supply chains and increase costs. For another thing, China is a huge market for many tech companies, and tariffs could make it more difficult for them to sell their products there. But it's not all doom and gloom in the tech sector. Meta, the parent company of Facebook, has actually rallied despite the downturn. This suggests that some investors may be betting that Meta will be less affected by the tariffs than other tech companies. The big question on everyone's mind is, what will the long-term impact of these tariffs be on the US economy? Well, the experts at JP Morgan are predicting that if the tariffs remain in place for an extended period, US economic growth could slow by 0.5% to 1%, and inflation could increase by a similar amount. That may not sound like a lot, but it could have a significant impact on your portfolio. A slowdown in economic growth could lead to lower corporate profits, which could lead to lower stock prices, and an increase in inflation could erode the value of your investments. The US dollar is also expected to strengthen against other major currencies, which could hurt US exporters. So what's an investor to do in these uncertain times? The best advice is to stay diversified, focus on the long term, and don't panic. Keep a close eye on the markets and on the political situation, and be prepared to make adjustments to your portfolio as needed. And if you're not comfortable making those decisions on your own, don't hesitate to consult with a financial advisor. Remember, in the words of the immortal Kenny Rogers, you've got to know when to hold 'em, know when to fold 'em, know when to walk away, and know when to run.